Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario where we're looking for a triangle, a 5-wave sideways structure in a wave A, B, C, D, E, after which we expect continuation to the upside. Currently working on wave D, where then the common target area is between the 618 and the 786 Fibonacci, taken from the high to the low of your wave C, giving you a target area between 69k and 69.7k. Inside that area, we do have some additional resistance, which is the blue box here, sitting between 69.5 and 69.7k. An uncommon target for your wave D is the 886 at 70.1k as well as the 05 at 68.6k. After wave D, we are looking for a simple zigzag to the downside in a wave E. The invalidation for this scenario is moving below wave A or moving above wave B before wave E is finished. Couple of things that are good to know in a triangle is that at least 4 out of the 5 waves have to be simple zigzag structures in either a wave ABC 535 to the downside or an ABC 535 to the upside. In this scenario, you can see that your wave D here has a final 3 leg to the downside, and if this is the high of B, this has to be counted as a wave W, X and a wave Y. If one of the waves is not a simple zigzag structure, it is usually wave C or wave D. However, if we count this a wave W, X and then a wave Y, it means that these structures here have to be simple zigzag structures in a wave A, B, C and also a wave A, B, C inside of your wave B. That also means that for wave D, we are looking for a 5-wave structure, which is something that we can pay attention to on the lower time frames. This triangle scenario is then a subdegree of this wave 4, as in this particular case we're then looking for an impulse, wave 1, 2, 3, a triangle in 4 and then a wave 5 to the upside. The common target for your wave 5 is between the 1.236 and the 0.618 on the chart, which gives you a target between 73.3k and 75.8k. Because wave 1 and wave 3 are quite similar in price, it does increase the probabilities for a wave 5 to be the potential extended structure, which means it is the longest, strongest and most impulsive wave between a wave 1, 3 and then your wave 5. In that case, the extension target for wave 5 is the 1.618 at 91.3k. The invalidation for this scenario is price moving to the downside, touching the high of wave 1 at 65.5k. The bearish scenario is a leading diagonal to the downside, a 5-wave structure where also all of the waves are internally 3-wave structures, 3-wave in 1, in 2, looking for a wave 3, then a zigzag family structure in 4, and finally a wave 5 to the downside. Once wave 5 is finished, we then finish a wave A or a wave 1, look for a 3-wave corrective structure in a wave B or 2, and then a continuation to the downside in a wave C or a wave 3. The common target area for your wave 3 is between the 786 and the 886 trend-based fib extension, taken from the start to the end of wave 1 to the end of your wave 2, giving you a target between 65.5k and 66.1k. Preferably, price is not moving down to the 1-to-1 at 64.9k. It is not an invalidation, but will reduce the probabilities for this particular scenario. The invalidation for this scenario is price moving to the upside, taking out the high of wave 2 at 70.6k. If we then look at the CVD divergences on the 15-minute time frame, we have both bullish and bearish CVD divergences. Higher low in price, lower low on this CVD, the target is this high here, and also once again higher low in price, lower low on this CVD, where the target would be this particular high. However, locally we now start to create some bearish CVD divergences, and these are important to at least keep in mind. Over here you can see that price is making lower highs but higher highs on the CVD, and that is a bearish CVD divergence. So even though we have the bullish CVD divergence here, higher low in price, lower low in yellow, and here a higher low in price, lower low in blue. Both of these now also show local bearish CVD divergences, and it could be quite interesting for price to move towards support. We do have some untapped support to the downside between 67.1k and 67.4k, with a daily just above at 67.4k. And if we then look at the probabilities of the different scenarios, if price can hit 68.1k, the probabilities will increase for the bullish scenario, being a triangle, and that is the low that you have on the chart over here. And the reason for this is that you will invalidate an impulse in a wave 1, 2, 3, 4, 5, because you don't want overlap between a wave 1 and a wave 4. And an impulse is one of the structures we need to look for in the diagonal for a wave A, B, C, 535 structure. Also, a WXY in B for that scenario, A, B, C, is currently not yet the highest probability scenario, where this has to be the end of your wave A, and then you need to look for a W, X, and then a Y inside a wave B, for then eventually a wave C to the downside inside that leading diagonal, wave 3. If price can hit 69.5k, then the probabilities will significantly increase for the bullish scenario, as that is at the moment your invalidation for a wave B and a wave A, B, and then a wave C to the downside. If price can hit 66.6k, which is the low over here, the probabilities will increase for the bearish scenario, as at the moment this would be the low of your wave C in a triangle scenario. And if price can hit 65.5k, which is taking this high over here, then the probabilities for the bearish scenarios will significantly increase, as this is the invalidation for your bullish impulsive scenario. On the 15-minute, it would be quite nice to hit some local support. We have the daily over here and the blue box, and then observe the reaction there. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.